Well, for some voters, health care was the most important election issue. For others, it was all about the economy. As we wait for the results from the presidential race to be complete, how are the markets going to react? We are joined by Craig Bolanos with Wealth Management Group to discuss. Hi, Craig. Nice to see you. How are you doing today?
Yeah, good to be back. What a crazy roller coaster it's been from last night through midday trading.
Okay, so let's talk about that. How have the markets been responding already to what's occurred?
Well, I mean, last night, the futures were negative. We were bouncing all over the board. But as soon as we opened up and it started to become apparent that we were going to end up with some form of political gridlock, a.k.a. a divided legislature, we've been off to the races. So you've had the Dow up some 700 points while we're speaking right now. There's a full-on market rally happening, and it's 3 days in a row now.
Oh, that's interesting. So what is it responding to at this hour, do you think? Because this morning, Biden's people said that he is well on his way to becoming the next president of the United States. Did you notice a change at that time? When did this happen?
You know, the change really occurred with the Senate because, you know, it's likely right now, nothing's guaranteed because some of these races aren't settled, but it's likely that we have a divided Congress. And with a divided Congress, that means there isn't going to be massive tax increases. There's probably going to be less regulatory pressure. There's not as big of a chance of a big tech breakup. So all of those are being viewed by investors as good, even though it's less likely that we get massive stimulus right now.
Okay, let's talk about each candidate. If Joe Biden wins, what do you think happens to the markets?
Well, I think if Joe Biden wins, that's what the markets are pricing in right now. You know, the odds makers say it's likely going to be him. Granted, we're not going to know for a bit.
Okay.
And I think the market's going to be okay with that. Now, certain segments of the market obviously aren't having a good day. You know, those segments being things like clean energy, those segments being like infrastructure, because it's going to be tough to get things passed. But I think the reality is, you know, investors should know we're going to have more of the same. And if there's a lesson that can be taken from this, again, I think polling and political biases entering into the investment process are probably as useful as my Blockbuster card, which is not very useful at all.
Okay, well, let me say this, though, because the polling, which everybody is questioning as a result of what happened, not only this time but the last time, showed that people who were interested in the economy were voting for President Trump. So you would think that that would have a direct positive impact on the markets.
Yeah, I mean, I think, you know, and it shows up somewhere. You know, even if Donald Trump doesn't end up winning, which is what Wall Street is thinking to us here, you know, obviously there was some drag along on his coattails because the Senate's not going to flip. And the Republicans actually picked up some seats in the House. And as a result of that today, you know, you see it in the way the trades are being laid out because, you know, the market is rewarding some of the sectors that were more likely to have higher regulation had this blue wave come through. But I go back to that concept of fiscal stimulus now being in the air. That definitely has effects for Illinois, especially given that the fair tax is obviously not going to pass.
Yeah, that's the biggest thing that everyone's talking about today. Okay, we can't let you leave without a little financial tip for our viewers. With everything that's going on, what is the one thing we should all be thinking about right now, despite who wins this election?
Well, yeah, despite who wins, that's just it. The stock market is going to be based on corporate profits. And right now, corporate profits are really looking at the virus, and corporate profits are going to continue to look at stimulus. So it's not necessarily who's in the White House. Just remember, check your political biases at the door when rebalancing your 401k, because the market historically has done well under both Republican and Democratic leadership. And we should be learning that lesson yet again, just as we did in 2016.
Okay, Craig Bolanos with Wealth Management. Thank you so much for joining us. Great to see you. Have a good afternoon.
Thanks.
And we'll be right back.